Hey everybody, it's Greg Gossett from Gossett Trading and Mentoring Live, and today is, what is it? It's Thursday, June 20th, 2019, and we are now in the final hour of the market. If you've been listening to this live stream for a while, you know that I believe the closing prices of the day are the most valid prices of the day, and therefore I make the majority of my trades based upon the closing price. My entries and my exits based upon the closing price, or at least as close as I can get to the closing price. So I feel like the smart money, the people that really know what's going on, they move the price where it should be at the end of the day. So the most valid price. So anyway, hope everyone's doing well. Let me just take a look real quick at something, just to make sure everything's all right. Good. Seems like it's working. Okay. All right. Hey, Andy, how you doing? Good to see you, my friend. He says, hey, Greg, got myself pretty flat this morning except for some long-term dividend holds. Well, it gapped up pretty good this morning, so hopefully you got some of that gap up before you went flat. David Gordon Russell, hey, how you doing, Dave? Nice to see you. I'm doing well. Thank you for asking. So, all right. So let me just make sure this is all coming in okay. Yep. All right, good. All right, so the plan for the day is, first of all, we're going to run the U.S. legal disclaimer. Second, we're going to come back. We're going to take a look at my current positions. We're going to go through each one by one, and we're going to look and see when I got in them, why I got in them, and how I'm going to manage them going forward. After that, we're going to go through my entire watch list, stock by stock, one by one, and we're going to take a look. We're going to look at resistance levels. We're going to look at support levels. We're going to see if there's any good setups for the end of the day, and then some kind of entry triggers to get in those, if there are. And then after that, after the market is closed, I'm very happy to answer any questions that you may have about anything I said during the live stream. If you're not clear on something, don't be shy. Just ask me and I'll do my best to explain it to you. Or if you'd like me to take a look at one of your positions or a stock that you might be interested in, I'm happy to give you my humble opinion on that as well. So, all right, let's see here. I have too many windows open. Okay. Hey, William's here. Good to see you, William. Nice to see you as always. Hey, Mount Doji. What's going on, my friends? Nice to see you too, as always. So, all right, let's go ahead, run the U.S. legal disclaimer, get that out of the way, and I will be back in 40 seconds.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, let's get down to business. So we're having a big day today. Thankful for that. The Dow was actually up 206 points, so it seems like the market likes what the announcement was from the Fed yesterday. The Nasdaq's up 45 points and the S&P's up 22 points. So actually the Dow was outperforming everything, and the Nasdaq is slightly underperforming everything. So, all right, let's get to my current positions and see when I bought them, why I bought them, and how I'm going to manage them moving forward. So, all right, well, DDM, this is the double leverage Dow ETF. I did buy this back on the 6th of June, and I bought it because we had a close above the 200-day moving average. And This is a quantified, profitable backtest, long-term backtesting approach. When you stay out of the DDM when it is under the 200-day on a closing basis, and you get in the DDM and stay in it as long as it closes above the 200-day. So that's the purely mechanical trading system, is stay in it as long as it's above the 200, get out of it when it's under the 200. If we break down below the 200-day moving average and we have some kind of, big crash or big sell-off or recession or something like that, you will be out under the 200-day. But if you have a nice big rally, you will be in if you are above the 200-day. So like I said, I did buy it back here on the 6th. I have been scaling out all the way up, and you can see I hit 2 profit targets today. I literally have about 5% of this position left. So I'm going to go ahead and just exit it today, just because I have 5% less and I just want to consolidate my charts and less things to look at and so forth. So this has been an excellent trade. I did get out of both of my positions at the open, so at the very top. So, there might be a little bit still to go, but like I said, I only have 5% position. So I'm just going to go ahead and lock this trade in. This was an excellent trade from entry to where it is right now, 7.5%. That's pretty amazing trade on the DDM. So thank you, DDM. That was a great ride. It could go higher. I don't know. If it does, that's great, right? But right now it's getting up into that kind of that rarefied air. So I'm happy there. I've gotten enough profit out of this. I'm very happy with it. So just going to go ahead and take this off the table today. Okay, IWM. I was going to buy this back on the 18th, but because we had this close above the 200-day and we had a close above the previous fractal, the reason that I didn't buy it was because the next day we had the Fed meeting. And, in general, I like to get out of positions in front of earnings and in front of huge announcements. So, and the Fed meeting yesterday in particular was a really important one. There's Fed meetings all the time, and it doesn't mean I'm going to get out of a position in front of every Fed meeting, because sometimes, there's no drama behind them. But in this situation where we had such a huge run up in bonds and, there was just a lot of energy around this particular Fed meeting and what they were going to do. So, I guess you kind of have to pick and choose, but a lot of times they're pretty benign. But yesterday's was kind of an important one, so I did get out. So I did re-enter the position yesterday on the 19th after the Fed meeting was out of the way. The reason I entered it was actually based upon the previous day, because we closed above the fractal, we closed above the 200 days. So going forward, this is not going to be a mechanical trend trading for me. I'm not going to hold this just as long as it holds above the 200, because I didn't really like the entry over this downward sloping 200. So this is going to be a discretionary trade for me, meaning that I can get in, make adjustments to this, get out if I see some negative price action. So you can see it did gap up. I sold 2 profit targets right here at the very top today. It is bumping up against the third ATR channel, which, in a large majority of cases, about 90%, prices tend to stay within the channels. Now, this doesn't mean this can't continue to go up just because it's at the channel. It might just ride that channel for a while. I don't know. So I'll be open-minded with this. It's a 59.68 RSI, so it does have upside momentum. So the only real hard decision, not hard decision, but easy decision, is actually what's going to be my stop, my trailing stop. And I'm going to be open-minded to the upside. If it got up to a 70 RSI, rejected that, I would probably go ahead and lock in the profits there. But at this point, I will probably get out, since we've had a nice little move here. I will probably get out Yeah, there's two decisions. One, a close under today's low, or a close under the 100-day moving average. What I don't like about the chart here today is that we gapped up and we're now lower than the open. We're still higher than previous close, but in candlestick in the candlestick world, this would paint a black candlestick, which is usually a bearish signal. So I guess I'm just going to have to decide and see what happens. Sometimes it's hard to know exactly because you don't know what the price action is going to be the next day, but it's either going to be a close back below basically my entry, or if I wanted to give it a little bit more room, I would give it the 100-day. I like the 100-day because it lined up halfway with this big bar. So possibly down to here, or possibly of the low of today, but we'll have to see what happens tomorrow. But I will be open-minded with this going up, going forward. It does have room from an RSI perspective, but I'm not going to just blatantly hold this and hold this and hold this like a mechanical system like I did with DDM. So all right. So anyway, nice profit on this today. Glad we took that trade. Glad we re-entered after the Fed announcement. Excuse me. Take a look real quick. All right, here is MasterCard. MasterCard gave us a twofer because I actually did short MasterCard here because we went above the 30, above the 70 RSI and closed below 70 RSI. We actually went above the 30 ATR channel and closed below. So we did go short here, and you can see it immediately went our way. We phased out, we phased out, we phased out. I did get out of the short position on 618 when it tested the 50 RSI and then bounced back above. I did enter a long position yesterday based upon a V2 entry, and the best V2s come when you make a higher high, you start moving down into value, the bars start to narrow, you spike down, the market tests these prices down here, the market decides it does not like them down there, which going forward gives you a little confidence that the market just tested this and didn't want to go down, right? That's good knowledge to have, right? And then I did go long yesterday when we had this V2. A V2 incorporates 3 bars, day 1, day 2, day 3. Day 2 washes out the low of day 1's low. Day 3 closes above day 1's close. So I did enter there. You can see this has been an awesome trade today, 2.62%. I did hit 3 profit targets, boom, boom, boom. So, this is extended nicely away from my entry now, obviously, right? We're up almost $7 on the entry. So moving forward, if we get a close below the previous day's low, that will be my signal to go ahead and just lock in profits. But that's been a sweet trade. I did take a half a short position here when we went short because we were in an uptrend, but I did take a full position yesterday because this is just a dip in an uptrend. So hope that makes sense. Looks like MACD might be going back positive today. So anyway, yeah, really good trade, really happy with that. And so what else do we have now? All right, we have the Qs. Well, I did buy the Qs back here on the 4th of June, and similar with the DDM, the reason I bought it was based upon a valid, quantified, back-tested approach of being out of the QQQs when you're under the 250-day moving average and being in them as long as they close above the 250-day moving average. So the day before on the 3rd, we closed below the 250. The next day, we closed back above the 250. We actually closed back above the 3rd ATR channel, and we also created a V2. So generally when I buy dips, if they're lower lows and then back over, I'll buy a half position. But because we had all these 3 signals happen at the same time, below the 250, over the 250, under the third ATR channel, over the third ATR channel, and the V2. I did go ahead and buy a full position here. My stop would have been right here if I was wrong, just giving me a small little stop, right? But fortunately, it kept going our way. And if something goes your way, you have to be patient with it and be open-minded with it, right? So as you can see, I've scaled out. I scaled out as we have this nice move. Then we move sideways. Nothing really happened. Then it scaled out. And then I hit 2 profit targets again today near the top. So I only have about 15% left of this position, but I will hold this because we do have a chance to getting up there at the 70 RSI. Yeah, I will hold this one. I am going to get rid of DDM just because I only have 5% left, and it actually, I think it almost tested the 70 RSI. So another reason to get out, but I will hold this one moving forward, see if we can get a little bit more out of this Q trade. But this has been a monster trade. I mean, this has been 7.71% entry. But the key is, if you have a profit, let it run, right? Be open-minded with it. But if you have a loss, get out small, right? You're never going to see me with a loss like this, right? These are the type of gains you're going to see me have. If they're losses, they're going to be small, quick. As soon as they close under that initial moving average or your initial stop target, you're out. So this has been a pretty sweet trade, and do have a little bit left of this, and we'll just keep it until it either tells us to get out or we just run out of shares to sell. All right, the SPY. Let me see. Mount Doji says, I've been loving this SPY buy at the close and sell at the open. Yes, well, me too. Let's get to why I do that, Mount Doji. So I do buy the SPY each day at the close and then sell it first thing in the morning. So when I do it every day, regardless of where the SPY is at. And why do I do it? Well, it's based upon this back test from @Bespoke Invest. It's a good Twitter channel. I like it. They have good information and stats. So, but it's based upon the back test that says if you bought the SPY on the open in the morning and sold it each day in the afternoon at the close, you actually would have returned a negative 5.2% since 1993. But if you did the opposite and you bought on the close at the end of the day and you sold first thing in the morning at the open, you would have returned 568%, meaning that more than all performance came in after hours trading. So almost all the move in the SPY since 1993 happened in the after hours and the pre-market, and then the market sold into those prices when it first opened. That's what it's saying, right? I mean, that's what it is, and that's why the results show this. So the red line here is the buying in the morning, selling in the afternoon. The green line here is the buying in the afternoon, selling in the morning. So just the fact of holding overnight gives you an edge, right? I mean, look at the difference. It's clear. That's why when people do day trading, I always think, man, that's got to be a tough road because there's no movement really intraday. The movement is overnight. I know a lot of people say, I don't like to hold overnight. It's scary and this and that. Yeah, I understand. But, clearly the market is telling you, the statistics clearly are telling you otherwise, that it is an edge. So 5.2% was based upon the 2017, January of 19. The numbers were actually minus 13.9% return, the buying in the morning, selling in the afternoon, and the buying in the afternoon, selling in the morning, the numbers actually went up to 634% from 568% when you go a couple more years into the future. And then Stephen Burns, who's a friend of mine, a famous author, famous trader, has a great channel on Twitter @SJosephBurns, has great information on there. So do yourself a favor, subscribe to his Twitter channel and read everything he posts. It will educate you and really be good for you. So I can't recommend it highly enough. But he did a study up, I think, about 10 days ago, where the return actually went from 634 to 712.16%. So that is why I buy the S&P every day at the open. I'm sorry, every day at the close, and sell it first thing in the morning. And so speaking of that, let's take a look. You can see I did buy it yesterday at the close at 293.29. I did sell it at the open at the very high. That was a big trade at 296.10. So yeah, really good trade on this. And I mean, it's been quite a month using this approach. You know, buy here, sell here for a profit. Buy here, sell here for a profit. Buy here, sell there for a little profit. Profit, 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 small loss, profit, small loss, little profit, big profit, little profit, big profit. So it's been a monster approach. Now it doesn't always work like that. There's going to be drawdowns. You have to realize that. So, you know, use a small percent of your position size if you're going to trade this approach. I use a 10% position size each night. So SPY, great trade. All right, Verizon. Actually being quite rude being down on an up day. I'm not happy with that. You never know with Verizon and AT&T. You never really quite know if they're going to go with the market or go against it because they're kind of a safety play. But I did buy Verizon yesterday on the 19th when we went, the previous day we went below all the moving averages here, the 5, the 10, the 20, and the 50, and then we reversed back up and closed back above, and we actually did form a V2. Not a great one, but I did like that it did form the V2 and it did close above the moving averages, and we were above 50 RSI at the time. It did open up, but it got sold into. So if we close anywhere below the 50 RSI, below this band of moving averages here, I'll just go ahead and get out for a small loss. But remember, we got to keep those losses small, and that's what we're going to do. So we'll see where it ends up. Boy, big day today. Another big day. I'm so grateful. It's been a great month. All right, let me take a look real quick. Doris, hey Greg, little bit not comfortable asking questions, but I am very curious, and probably everyone else is. How much ROI can you get in a year? Thanks a lot. I'll tell you what, we'll cover that after the market closes, okay? Because it's kind of a detailed or involved answer. So I will get to that, Dennis, at the end of after the end of the trading day. Dr. Jorgen says you are master of MasterCard, short or long. Yeah, it's been good. Thank you, Bruce. It's been nice. Better close your Visa and Amex cards. Steve says, day traders are chasing pennies in a puddle. Overnight is where all the dollars are. Hey, Steve Burns, thank you for coming by. It's always an honor. Yeah, it's true. You know, Steve Burns says, I'd rather try to get the easy dollars by swing trading than trying to get the tough pennies by day trading. Or something like that, right, Steve? So anyway, hey, bud, thank you so much for coming. It's really an honor to have you in this live stream. Okay, listen, before we get to going through the charts for today, I did want to share with you, I like to post sayings from successful traders and authors, basically based on psychology. But here's Linda Raschke. I don't know if anyone's heard of Linda Raschke. She is in one of the versions of Market Wizards. I have met her. One of the first trading books I ever read was from Linda Raschke about 24 years ago, but I think she's probably one of the most famous female traders in the world. She says, for me, preparation and then process is 90% of the game. The other 10% is a numbers game. So, what she's saying there is the 10%, are the actual execution and how the numbers are going to work out for you. But the main part is the preparation and then the process. You know, I spend probably 2 hours at nighttime going through the next day's charts, going through, you know, support and resistance levels, entering in all my orders. It's a lot of work. I mean, this is not an easy way to make money. It's not like you just make a few keystrokes and boom, you're done, you're out. I mean, I spend hours at nighttime in preparation every day, and it's so true. You know, you have to have a process, you know, of like specifically how you write down your trades, how you write down your results, how you like for instance here, you know, every day I make myself a little list at the end of the day so I know what to do. This is old, but Amgen, sell below range and then the price. So at the very end of the day, I can just look and see exactly what I'm supposed to do, because, you know, right before the market closes, there's a lot of things going on. And unless you're super, super smart and you can keep everything clear in your head, you're going to have a tough time and probably make some mistakes. So I'm not smart enough to do that. So I have to write things down. And then the other is I just took a quick picture. See all these books? Every single page is filled with my trades, my possible entries, where I'm supposed to get in, where I'm supposed to get out, you know, and it's part of my process. So you got to have literally a process where do you put your books? Where do you write your stuff down? How do you go through your charts? How do you mark your potentials? But the process and the preparation for the next trading day is so important. So don't think you can just get away with winging it, you know. So I did want to show you that, but just one more time from Linda. For me, preparation and then process is 90% of the game. The other 10% is a numbers game. So I did want to share that with you. Get yourself a process that you can repeat daily, so you know exactly where you're at. So, all right. Let's see where we are right now, what's happening. So the Dow's come off a little now. It's down, it's up 230. So it's come off a little bit. All right. Well, let's see if there's any potential entries for today. Hey, Ramble Ron's here. Hey, Ramble. Good to see you, buddy. I've been doing the SPY trade overnight this week. It's been working nicely. Yes, it has. It definitely has. But remember, sometimes it doesn't. In the long run, yes, the results say that it does work well. But, you know, Miguel, it's absolutely true what you say about buy overnight. There's very good automatic traders with that kind of systems. For example, Joe Krussinger has the ONS, one night stand buying over weekend. Oh, there you go. Yeah, there's a lot. There are a lot of different approaches, but at the core of it, a lot of it is the holding overnight is where your edge is. All right. So let's go through here and see if there's anything that piques our interest for today. All right, Apple. Apple's up $1.67. You know, Apple had a nice EMA 1050 EMA cross the other day. I believe it was right here at 193.72. So it has moved up nicely from that. The 1050 EMA is a good quantified backtesting approach where you stay in the Apple position as long as the 10 is closing over the 50. That's the pure mechanical. And then if it closes under, if the 10 closes under the 50, then you get out. But otherwise you stay in until it crosses under. So I decided not to take this trade just because I took Amazon at the same day. Amazon also triggered a crossover on the same day, and so because it was close to the third ATR channel, I didn't take it. I took the Amazon trade instead. But anyway, any of you that have this particular trade, I'm really glad it's moving up for you, and I hope that thing just motors up, gets above that 200 and can hold it. So for me, nothing on Apple, but it is currently under a valid 1050 day EMA cross. All right, here we have AMD. Well, AMD did move up nicely, made a higher high, came back down into the value zone, and then did create a V2. If you remember, we were looking at this during this V2, but what I didn't like the move up and the straight move down. It's better if you move up, you kind of move down slowly, drip down, move sideways. The sideways movement is important because you have to show that there's no more supply coming into the market, and the market has found somewhat of a bottom there. There's no more sellers under this, but this just went up, went down, triggered. I didn't take it because of that reason. I wanted to see some sidewards movement, and it did reverse kind of negatively, so I'm glad we didn't take that. So nothing on Advanced Micro today. Here is the Amazon trade. I'll show you. I bought this based upon the 5 crossing over the 50 moving average. This is simple moving average, not exponential. I did buy it here because of the crossover. And then yesterday we had the Fed meeting. So the day before the Fed meeting, I decided to get out. I just wanted to play it a little safe. And also the chart of the day I didn't like. We went up, we tested the third ATR channel, and then we closed back down, which is called a kangaroo tail or pin bar reversal. So I did make a nice little profit on that at least. Did get out one of the profit targets near the top. And then because of the Fed meeting, I decided to just go ahead and get out of it. Just a personal decision doesn't make it's the right decision. It's the safer decision. I think that's clear. But I decided to just go ahead and lock in the profit that I had. So currently it's at a 62.86 RSI. We'll see how this goes moving forward. For any of you that are in this trade, I wish you luck, and I hope this thing keeps motoring up nicely for you. But again, the mechanical trade was based upon the 550 SMA cross. So good luck to anyone that holds Amazon. All right. Boeing. Well, Boeing had that big. Oh yeah, I forgot. We did buy Boeing back here. Just to give you an example of a double bottom. Here we have a low. We rallied. We came down. We made a lower low than the previous low. You see the MACD readings here, very narrow, shallow. The previous low, very deep. This shows that there's, from a MACD perspective, it's running out of some momentum. I did buy it here when we tested this previous low and then reversed. That was my trigger. Held it for a couple days, sold it up to here. So it was a 2-day trade. It was a nice trade. Since then, I haven't been in this trade. A few days ago, we had that big, strong day above the 200-day, but it was a little extended. So I was waiting to see if I could get a better price. I would have gotten a better price if I would have bought it yesterday, but I was waiting more for a halfway move, so I didn't pick it up, and then it has moved nicely here. So nothing on Boeing today. Alibaba, man, this is the one that I've really been struggling with. I did want to buy it over the 200-day, and when it took out this fractal, a fractal is a high with 2 lower lows to the left, 2 lower highs. I'm sorry, two lower highs to the left, 2 lower highs to the right. And then we closed strongly above the 200-day on nice volume. But on the other hand, we rejected the third ATR channel, which I didn't like. And then the next day was the Fed meeting, which also concerns me, as you know. So I decided just to let it go because it had rejected the third ATR channel twice, rejected the 250-day twice. And then today it gapped up like a champion. It is lower than the open, which is not particularly bullish. It does look like it is catching support at the third ATR channel. A lot of times this third ATR channel acts as resistance, but if you can get over it, then it can act as some support. It's at a 57.94 RSI. We have this downward sloping 50 here. I think the best time for me to have bought it was there. So, when you get torn on a position like this, and you're getting your ruler out and you're trying to make it work for you in your head. I have found in my experience it's better idea just to let it go and just say, okay, that's the one that got away, so I'm just going to let it get away and look for a better setup. So anyone who's in Alibaba, hope that keeps going up for you. Caterpillar, well, nice strong close above the 200-day, right? Really nice. Problem is, it's the 68.26 RSI, and it probably got close to the 70 RSI. So it's just too high for me. I've noticed a lot of these, they just keep on trucking. They just keep on going, but it doesn't fit my parameters for my rules. So, if we close back under the 200-day and then close back above, giving us a higher low pattern, and a little lower RSI, I think I would get interested. But at this point, I feel like I'm going to be chasing this. But who knows? It might keep going on. But I have to stay true to my approach. Canopy, well, that was down actually under the 200-day at one point today. It's rallied back up. This isn't bad, but we have earnings today, so I'm just going to have to let that go. We can look and see what happens after earnings. If it gaps up, stays strong, we can, play the low of the gap up days, possible entry. Cisco, well, we went up, we tagged the third ATR channel, we came back down. We tagged the third ATR channel. I certainly wouldn't buy it here. It may break out, who knows, I don't know, but I'm not interested in Cisco right now. So diamonds, we have those in the DDM. So opened high, went down, then closed all the way, looks like it's going all the way back up. So that is very positive, but nothing there. Well, Disney is kind of stuck in this range. We had a good trade back on Disney on June 6th. And the reason that I bought it, we had this nice V2 entry where here's day 1, day 2, day 3, day 1 takes out the low of day 1, day 3 closes above the close of day 1, and in addition to that, the month of May was really strongly down in the market, but Disney went sideward, so it had a lot of relative strength, so that caught my eye, and it was stronger than the market. So the implication is if it's stronger in the market when it's going down, it's probably going to be stronger than the market if the market turns around. So I did buy Disney here back on June 3rd, and we had a nice move. I phased out and I got out here. So it was a great trade. I was looking for a re-entry, but it didn't come down far enough, and then it took off without me. Etsy, nothing really there. Ford, I did buy Ford basically here and here. I bought a half position here when we took out this fractal, the high with the two lower highs to the left, two lower highs to the right. The fractal happened within the 1 ATR channel, was a nice big strong bar. I did buy half of my position here, then I waited to see if it'd come back the next day. I did buy a second half here, and then it did move up, bump, bump, hit some profit targets along the way. I did get out before the Fed meeting, and I'm glad I did because now I've missed out on this downward movement. So it actually did pay for me to get out of the Fed for the market, mainly because I had positions that went down since. So, but nothing there on Ford right now. Facebook, big strong move off the 200. I know Steve bought down here, had a monster trade, so that's great. But for me right now, I don't like this. I don't like that we're closing below the open, Five below, this is probably the premier example of a V2 that I currently have, where we have a high, we come back up, we make a higher high, we sell off, which is normal, back into the value zone, we move sideways, then we have a bar that stabs down and reverses. If this bar would have closed above the previous bar, that would have been considered a V1, but it didn't. So if that day doesn't work, the second day can work, and it did trigger the V2 here. But again, move up, move back down into value, move sidewards, have a stab down and a test of these prices and a reversal. That's one of my favorite trades. And in addition, it closed above the moving averages on this weekly. I did go ahead because of the Fed meeting again, and I got out of the trade. So, but it did save me money getting out of the trade. So I'm not in 5 right now. So we'll just move on to something else. Gold. Look at gold, everybody. Holy smokes. So I think we've had an 8-year breakout on gold. It's at an 82.51 RSI. Really, I really don't want to get involved with that. It would scare me. It would scare me to death to buy it, and it would scare me to death to short it. So I'm just going to stay away. We did buy this back here on the 30th of May when we took out this fractal within the channel. At the same time, we had a 520 EMA cross. So this was a more conservative trade than buying up here. But we did have a nice move up, moved up. We phased out all the way to here, got out of the trade. I was waiting for a pullback to get back in, but it never came. Google, nothing there. You know, my first point of interest may be a close back above the 200. Oh man, I've been babbling too much. We got to hustle. Goldman Sachs, nothing on that. IBB, I did buy a quarter position here of IBB, wrote it up for a couple days, and then got out. No, I think it was 1-day trade. Yeah. I bought here, got out here because I was concerned about the Fed meeting, but it has moved up since then, since the Fed meeting, so it's still moving up. But that was a good 1-day trade. But the reason I took it is because we had a 5. I can't remember now. Let's see. Over here on my charts. Oh yeah, we had a 530 EMA cross. That's right. We had a 530 EMA cross, and we took out a fractal. Big strong day on big volume. That's the reason that I bought it. I only bought a quarter position because it was a big bar and a little extended, but at least I did take some, but I'm not in it now. I don't think I'd be buying it up here. If I owned it, I'd keep it, but Intel, you know, we did buy back here on the 29th. We had it close below the 3rd ATR channel, close under the 30 RSI. Next day we closed above the 30. We closed above the 3rd ATR channel, and you can see that was a nice trade for us. Boop, 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 and scaled out right up to about here, but nothing there. Russell, we have the Russell with the close back above the 200-day. I am going to keep this unless we either close below the previous day's low and or possibly closing below the 100-day. I'll just have to see what the market does in the future. Coca-Cola, I was waiting for this to pull back into value, but it didn't pull back enough, so I don't have anything there. Lockheed Martin's breaking out here, really strong trade. 71 RSI, so nothing on Lockheed Martin, although we did have a really nice trade back on Lockheed Martin here on the 29th of May when we made a higher high, we came back down, we moved sidewards, we spiked down, reverse, triggered a V1 that within the channels, the 1 ATR channels, and then we scaled out right up to about here, so that was a monster trade. I was looking for a pullback, and the pullback did come, but I didn't get a trigger to get me back in, unfortunately. MasterCard. We got our short and we got our long, so this is a good trade on MasterCard. 3M, look at that, Bruce. This is Bruce's favorite stock. So you can see it's right up against the 3rd ATR channel there, but he's had a really good trade on that, but nothing for me on that one today. Merck, Merck got sold into at the top. Microsoft, holding above the 3rd ATR channel, but nothing there. Netflix did have that nice bounce off of the 200-day moving average. I was considering this here, but I wanted to see it close under the 200, then back over, but it's moved up nicely. Hey, speaking of Netflix, is it just me, or is every show on Netflix about a serial killer, a murder mystery, or Nazis? Seems like when I go through to watch something on Netflix, those are your choices. Murder, and murdering Nazis. Maybe it's just me. Let's see. Just give me 1 second. I lost my groove. I lost where I was. Nike. I was going to buy Nike with this move above the 100-day moving average, but I didn't because of the Fed meeting. And then it was a good thing I didn't. Now it's moved up. Would I buy it here now? Probably not. You know, I get scared of the third ATR channel, and and the way my mind thinks is I think, okay, maybe we get up to here, but that distance is not far enough compared to where my stop would be. So sometimes you just don't get in a trade. It looks good. You try to get it. It doesn't work. And then the next day it moves back up again. But just because it goes back up over your buy signal, always keep in mind your risk to reward ratios. It's important. Philip Morris. Well, I actually am interested in Philip Morris today, guys, and I'll tell you why. I do trade Philip Morris a lot. I've had really good success with it. But you can see, right, this has been in a serious downtrend. See how we lost the 10-day moving average? The 10-day moving average is this pink line. We've gone down, 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 down. We've stayed below the 10-day moving average. We finally kind of caught a bid here. See how we've been moving sidewards and we've been building this base? Last couple days, we did poke our head below the low of the previous lows. So we tested this new area down here. We tested this new area down here. And then today, it looks like we're going to close above the 10-day moving average. Will be the first time in over a month that this has happened. And then on top of that, we have this sidewards movement. We have a stab down reverse. We have a stab down reverse. And then today, technically, we did trigger a V2, day 1, day 2, day 3. Day 2 takes out day 1. We are certainly going to close above the close of day 1. And in addition to that, we're closing back into the channel, the 1ATR channel. In addition to that, we're closing above the 10-day moving average. And in addition to that, we have a MACD crossover and we have a lot of volume. So, this looks pretty good to me, actually. So I am going to mark that. A lot of things lining up. Like I say, I do trade Philip Morris a lot. It's just one of those stocks that I kind of know the personality of. Doesn't mean this is going to be a winning trade by any fact, right? But where would I get out if I'm wrong? Well, this is the washout bar, probably a close below the previous day's low or a close below the washout bar, which is this day. So we'll see what happens. Did pay a nice dividend this morning as well, but you would have had to own it last night. So Philip Morris looks pretty decent right here. PayPal, pegged that third ATR channel and reversed. No. Qs, we already have this, hit a couple profit targets. Silver, I know, had a big monster day. 71 RSI, I just wouldn't touch it there to the upside or the downside. SPY, look at that. Closed right back up where it opened. That's amazing. But we got that at the opening. So I will be buying this today. I got to tell you, it concerns me, but you have to follow the rules, right? You have to do it's an everyday situation for the long term. So I will be buying SPY at the end of the day again. All right, Square. Square has moved above the 200-day moving average. I like to show this trade, guys, because it's really good. You have a low, you have a rally, you make a lower low, you have a beautiful double bottom. This is lower than the previous bottom. You have this beautiful MACD. This is deep, this is narrow. Then you have a V2. You go back up into the old range. So you have a false breakout to the downside. You have a double bottom divergence. You have a V2 entry. You have a close back into the ATR channel, and you have a MACD crossover. So we rode this from here up to about here. It was a monster trade, 14% from bottom to top. So that was actually my largest trade of the day of the year. But here at this level, it's too high. AT&T, no. Bonds getting sold into a little bit here on that double top, no. Tesla, no. I do want to show you, I did enter natural gas here when we had this. We went under the 30 ATR channel, under the 30, back over both of them and the V2. Well, The next day it went down. I held it because it held halfway. Next day I got out. You know, I didn't like getting out here. It seemed like it was low enough. But imagine if I had not have gotten out. You know, tack on another 5% or more loss by not following my rules. You'd feel horrible. And then if you still own the position, you're like, well, I can't get out now. Now it's too low. It's a horrible mindset to get into. It's just better to go ahead and get out the second you have an issue. I got into gold. I got into oil here under the 30 ATR channel, back over. Didn't really do what I liked. Then it closed below when I got out here. Now it's just raced up like crazy, but that's how it goes. You got to just let it go. Let it go, Greg. Let it go. The dollar really got beat up. And by the way, on the dollar, well, I'll explain that after. Let's see. Visa having a good day along with Microsoft. VIX did test the third ATR channel and bounce off it. You know, it could be a little bit of an omen. You never know, but prices tend to stay below the third ATR channel and above. And when they get up to there, sometimes that could be, you know, potential pivot points. So we'll see. Verizon, well, this is going to be a game time decision here. 57.39. This is a tough one. We'll have to keep our trigger on this. Now it's back to a 50 RSI. The 10 is 57.42.39. The 50 is 57.35. All right, we'll just have to watch that. Energy, big day up. Nothing. Financials. No. Real estate, just heading on up. Utilities and XLV. I missed this trade because I thought it closed under the 200-day. That would have been another great trade, but I missed it. All right, so let's see what's happening with the rest of my positions and what we're going to get into. And then I can see everybody has a lot of questions, and I definitely will get to those. Okay, so just hang on. Let's get the market out of the way because kind of a few things I have to do. So I'm going to go ahead right now. I am going to go ahead, get rid of that last 5% position on DDM just to clear up the clutter. That was a freaking great trade.
Order filled.
And it was double leveraged.
Order filled.
Okay. IWM looks fine. MasterCard is a monster. Qs, I am going to keep those. SPY, I'm going to buy that at the end of the day again. And Visa, I don't like that it's closing under. All right. And Philip Morris, I'm going to go ahead and buy my Philip Morris trade here.
Order partially filled. Order filled. Order partially filled.
77.21.
Order filled.
All right. All right, so SPY, we're going to be buying that again. DDM, we got out of there just recently. IWM is looking great. MasterCard looking great. We just bought our Philip Morris, so we know that. Now this is a half position on Philip Morris, right? Because we're underneath the 200-day moving average. I could actually talk myself into a full position on this, but I am going to just go with the half because it's under the 200. Qs. We'll buy the SPY. Well, I'll tell you what, we do not have much technology, I can tell you that. You know, I don't want to just go ahead and rush in and buy some just because I feel like I'm lacking at these levels. You know, if you're in the position, that's different. You have profit, but to initiate positions up here does concern me. So sometimes you got to just kind of be happy with what you have, and especially be happy when you have a nice run like we've had. And don't get cocky, because when you've had all these winning trades, you think, oh, I really know how to trade. Well, you know, for you to hold on to a winner and make some money on it, yeah, it takes a little skill, and maybe not skill, but it takes some discipline, which is good. But you know, people always run into the worst problems when they've had a huge win or they've had a huge loss. That's when, you know, it can affect your thinking. So stay humble, stay solid and stable. All right, we got out of DDM, right? Yes, in both accounts. Yes. IWM, we're fine. So that was the only trade. Was the oh crap. I haven't bought our SPY trade.
Order filled.
Okay.
Order partially filled.
296.28.
Order filled.
296.28. And that is our new entry for today's. Boy, what a big day today. Big days these week. I actually hit an all-time high an all-time year in my trading account today. So that's always a positive thing, right, guys? I have to take myself out to dinner or something. So 285 now. 285. We have 1 minute. And as soon as we're done with that, I'm going to get to questions, everybody. All right. Hey, give me 1 second. We're all set up here. Just give me 1 minute. I've got to go move my dog around, and then we will get to questions. So I'll be right back. Okay, thanks for holding on. My dog knows when I'm doing the live stream, and that's like when she likes to mess with me. Okay. All right. Well, another big day. Very happy for that. All right. Hey, before we get to questions and answers, as always, I just want to put in my little plug and let everyone know that I do offer private one-on-one teaching, coaching, and mentoring lessons. in the evening time via Skype. So if you'd like to work with me one-on-one, just send me an email. My email's in the description of this live stream, and then also my hourly rates. But it'd be great to work with you. I know I can help you. Here during the live stream, I'm the one that does all the talking, but in private lessons, be ready for me to be asking you a lot of questions, because I'm going to have you teach it all back to me. Because it's important that you can teach it back to me. That way I really know that you'll know it. But I know it will help you. It's important. It's nice to work with somebody one-on-one, and it does make a difference. So if that's of interest to you, just send me a message on Twitter or send me a message by email, and it's in the description of this video. And then if you did like this video or you do like this channel, do me a favor, hit the thumbs up button. It does help with the rankings and lets Google know that people like the content. So if you could just click down there, that little thumbs up button thing, and just click it up. And then also, if you can share it on social media or tell your friends about it, let's build this channel. There's a lot of people out there that need help with their trading, and I think I can help them do that if they come here. So, all right, enough of that, and let's get to questions and answers. Okay, where did we start here? Ramble says, I've been doing the SPY trade overnight this week. It's been working. Yes. Oh, and then Miguel said, yep, it's absolutely true what you say about buy overnight. Very good automatic traders with that kind of systems. For example, Joe Christener has the ONS one night standby over weekend. Yep. Ramble. So short on Amazon is not a good idea. No, my personal opinion, Ramble, I would not be shorting up here. I know it looks tempting, but it's strong, and I'd rather short on some weakness with a double top, lower high, something like that. But to me, this seems like just kind of a bit of a stab. I mean, yeah, it did reject the third ATR channel. If it went over 70 and back below 70, maybe. But no, if it were me, I would not short Amazon here. Ramble says, click on the bell. It helps the channel a bunch. Oh, yeah, that's right. Thanks, Ramble. Yeah, click on that little bell and you get the notifications. Johnny says, Netflix is okay if you just subscribe for 3 months a year. Yeah, you're right. Kind of go in, see the things that you want to see. Yeah, you're right. Ramble Ron says, I'll take murdering Nazis for 500. Yep, that's right. That's one of the options. Mount Doji. XOM. Oh, yeah. I used to trade XOM a lot back in the day. And I took it off my list. I'm not sure why now. All right, so hey, Mount Doji, do you want to give a shot at breaking down this chart to me? I mean, I'll break it down if you don't want to, but do you want to take a shot typing in the chat what your opinion would be on this? All right. While I'm waiting for Mount Doji, let's see. Steve says, these kinds of wins are why we love trading. That's right, Steve. All-time highs in trading capital are always beautiful. I am enjoying it. I know you're right there too, Steve. I know that. Congratulations, my friend. Been a great month. Steve, top 2 reasons not to trade. 1, gold, silver, short selling can get you killed during parabolic moves. Yeah, it's totally true. I just would not. I'm scared of gold to the upside, and I'm scared of it to the downside as well. So good advice, Steve. Look for a more conservative setup, All right, I didn't hear back from Mount Doji, but so on the positive, let's break down this positive to negative. On the positive, it looks like we did close above the 200-day. That is positive. It did come from a higher low. That is positive. RSI is above 50. To me, that's positive. We did have some strong volume. That is positive. On the negative side, we have this confluence of all these moving averages right here. We have 100. We have the third day channel, the third ATR channel. We have the 200 and the 50, but we did close above them. So RSI is not overbought. We did make a higher low. Mount Doji says, all I know is that XOM gapped up today, had huge volume spike sitting on top of the 50, may have bounced. Yeah, about exactly what I just said. Yeah, good analysis, Mount Doji. It's exactly right. Those are all positive. But the only thing that concerns me is the third ATR channel here. But, you know, to me, it would be a legitimate trade because if you're wrong small. Any close back under the 200 would get me back out. But if it keeps on going and keeps on moving up, you know, you have room to go up there based on the RSI. So, yeah, good analysis, Mount Doji. Mine's exactly the same. David Gordon Russell says, Dennis asked a question earlier about ROI. Oh, thank you for reminding me. Okay, so here's Dennis's question. Hi, Greg. A little bit not comfortable asking this, but I am very curious, and probably everyone else is here. How much ROI can you get in a year? Well, that's, you know, it's a tough question because every year is going to be different. I can tell you that my goal is somewhere between 1% to 1.5% per month. So 12 to 18% per year. That's my goal, right? I mean, it doesn't mean I hit it every year. Sometimes I don't hit it. I didn't hit that last year. I actually did make money last year, even though we had such a horrible year. So, but I didn't quite make 12%, but did make money. But, you know, when you average it out, that is my goal. That, you know, but I position size small. You know, I mean, this year I would have been up a ton more if I used my full account. But as you know, I only use a maximum 60% at any one time. And a lot of times I don't do that. So I'm kind of ultra conservative because I don't like to have drawdowns. So, you know, to get higher returns, you're going to have bigger drawdowns. That's just all there is to it. But I would say, you know, if you trade correctly, you position size correctly, you're patient with your winners, you only take positions that you're supposed to, and you do it over years and years and years, I think somewhere between 12, 15, 18% year on average is what a really good trader could expect. But again, it depends on position sizes. It depends on you know, your maximum positions, how much you take. I'm a little bit on the conservative side, but yes, I mean, the capital that I put at risk, 12 to 18% is my goal, and you know, that's what I've been achieving. Does that help, Dennis? It's kind of a subjective question because there's a lot of variables, but you know, even if you went on the low side, 1% a month, you know, 12% a year, I definitely think it's achievable because I do it. Oh, Steve Burns says, in 25 years, I've made over 20% a year in half the years. I have gotten less aggressive and more conservative on maintaining what I have, so I now target 10 to 12% with a 5% drawdown. Yeah, exactly. Just pretty close to me too, Steve. You know, 10 to 15% is achievable, but the 5% drawdown, that's the important part. That's the most important part to me. All right, so highs today, I'm really happy with that. Nice big day today. So the only thing that I did add today was Philip Morris. So DDM, thank you so much for that great trade. That was a wonderful trade. Just time to move on that one. Boy, I've had DDM for like 3 weeks. So we still have IWM. We still have the nice MasterCard trade. I did add the Philip Morris trade today. Still have the QQQs. Did buy SPY at the end of the day. Yep, right there, 296.28. And I did decide to keep Verizon. And to be honest with you, this one got away from me. The time got away from me. Had I noticed this with the 49.67 and it closed under the moving average, I would have sold it, but I didn't catch it. But sometimes that happens. So what do you do, right? What do you do? Maybe it'll go up tomorrow. Maybe it will plunge and I'll really be mad, but this one did just get away from me. William, when waiting for a higher low to form, would it be safe to take a V1, V2 entry near the bottom of the forming higher low, or would you consider that anticipation trade? Would it be better to wait for a fractal and the price is in the value zone? Let me see if I understand this. When waiting for a higher low to form, would it be safe to take the V1 V entry near the bottom of the forming higher low? Yeah, okay, I think I know what you mean. You know, usually a V1 or a V2 does cause you to get your higher low. So are you saying, would it be okay to take a V1, V2 entry if you have like a moving average above that you're waiting to break back above and you're taking the V1, V2 entry before it crosses back over the moving average? Is that what you're saying? Like maybe we look at XOM because I think that was on XOM, William, when you say yes right there. Okay, so I'm going to assume that's right. It depends where the higher low comes from. I usually like to take higher lows closer inside of the ATR channels, inside of the of the value zone. Would I take a V1 V2 here? 617 on, okay, 617. Yeah, I would consider taking it here, William, because it's close to the one ATR channel. I wouldn't take it up in this range. Remember, I like to take a lot of the V1s, V2s within the channel because then you have some ability to move from here to the third ATR channel, or if you short from here to the negative third ATR channel. This one, I mean, this is a nice V2. Yeah, I would consider taking that V2, and then I would also factor in what the RSI is too. Would I take a V1, V2 up here at a 60 RSI? No, I wouldn't, especially with the 100-day moving over. At that point, I would just rather wait till it closes above the 200-day because then it becomes kind of a new type of trade. But to answer your question, yes, I would take a V1 or a V2 before the break of the moving average because the V1, V2 is legitimate, but it depends where the V1, V2 happens. And I would much prefer it in the value zone, or where was a good example? Like here, Philip Morris. Here's a V2, right? It's not a great one. I did it in conjunction with the break over the 10. But do you see how we have a V1, V2, and it closed back up into the channel. I like when V1s, V2s happen in the channel, whether it's from here up into the channel or from here and it happens right before the top of the channel. So does that make sense, William? If it doesn't, I'll reapproach it in a different way. Trying to think of another V1 or V2 entry, like all right. Okay, good, William. Yeah, sorry. In the future, I will keep that in mind, and I will look for those kind of patterns when we're going through charts. You know how it is when you're looking for something, you never find it. But as we go through the charts each day, I'll look for that particular type of situation where you have to kind of make a judgment call. Would I take this or would I not with the 200 looming over? So Dennis, Mount Doji says, I'm still scratching my head on Nike. Yeah, you didn't take Nike, did you, Mount Doji? I don't think you did. Or did you? I can't remember. I thought maybe you were flat. But yeah, this one, yes, it broke above. It did break above nicely. But I don't know if this is what you're talking about. But the reason I didn't take it today was because, see, my stop would have been a close back below here. And the way I look at this is this third ATR channel here looks to me like, it may run out of gas. It hasn't, but a lot of times it does. So, my reward would be from here to here, theoretically, but my loss would be from here to here. So it doesn't offer me a lot, like 2-to-1 to the upside. Now, listen, if you base it off the 70 RSI, then yes, but I always factor in the third ATR as a possibility, as some resistance. So that's why I didn't take the trade. It may go great. I don't know, but just I didn't like the risk to reward setup based upon the third ATR channel. Dennis says that helps. Okay, good. Dennis says, Steve and Greg, you are awesome. Thank you very much, Dennis. I appreciate it. It's always an honor to have Steve in here. I mean, my gosh. I mean, what an honor to have him in here and be able to pick his brain. Just awesome. Thank you, Steve Burns, for coming. David, thanks, Greg. See you next week. Have a great week. Plenty of hiking, I hope. Yep, I'm going to go hike today when I'm done with the live stream. So Mount Doji, I'm hoping tomorrow drops more. Oh, Twitter, not tomorrow. Let's take a look at Twitter. I haven't looked at that for a while. So Mount Doji, when you look at this Twitter chart, tell me about it. What are you looking for? What levels are you looking for on this chart specifically? Here's the weekly. A lot of volume on that sell-off today. All right, well, maybe Mount Doji stepped away, but yeah, I mean, if we could drip down to the 100-day moving average, it did hold support at the 100-day moving average last time. So, I like to look back and see where did the market, what moving average did the market respect in the past. Mount Doji is hoping Twitter bounces, hits the 30 RSI. If we are lucky, that will also be where the 100-day moving average is. Well, let's take a look at that. We can do that, actually. If it gets to the 100 tomorrow, it'll be to 37.87. Where would the 30 RSI be tomorrow? Closer down here near the 200. Thanks, Ramble. Good seeing you, my friend. Thank you as always for coming. Appreciate it. So, if it does get to the 100 tomorrow, it's not going to quite be in the low 30s, but still, it did respect it the last time it was at the 100. Actually, Twitter is something that I might be interested in selling some puts at down here at the 200-day moving average, because I know now with the 200-day moving average, I'm going to be in the low 30s at the same time I'm going to be at the 200, which should hold some support. I don't know how much it would pay. It would depend, what the exact strike price was and exactly how far I wrote it out. But thanks for bringing that up. I'm actually going to start looking at Twitter for possibly selling some puts down here. Well, good to know the 30 RSI is closer to 200. Yeah, it's that's when I sell puts, that's what I look for. I go, okay, where am I going to have a confluence of a 30 and at the 200-day moving average? Let's also look at that on the weekly chart. So if that was our area to buy or sell puts at, let's see, does it dovetail with anything on the weekly? In the support back here, in this previous support here, still within the ATR channel. Let's see on the monthly, does it dovetail? Not really specifically, but that might be something, if you're looking to, buy a deep dip on this, close below the 200 back over might be an interesting area. If you're a put seller, I'm going to price these out later. I'll let you know tomorrow if I decide to sell some puts there, but thanks for letting me know about that, Mount Doji. Whew. All right. Well, if you guys are available tomorrow, I will be on during the last hour of the market, and I hope you can make it. And if you have any questions that I didn't answer today or you're not clear on, feel free, just go ahead, email me. My email's in the description of this video, or you can send me a message on Twitter as well. But anyway, great week, great month, great day. So I'm very happy, and grateful for this nice trading moment. Sometimes the market just goes up and up and you think, man, how long can this thing go up? But there's going to be times in the future, I can guarantee you, I don't know when, but remember I said this, there are going to be times when the market goes down, and it's going to go down and down and down and down. And you're going to think, this is so stupid. How could this go any lower? I don't know when it's going to happen, but it will happen. So, always be careful, position size correctly, follow your rules. William says, thanks, Greg. Great info as always. Thank you. Appreciate that, William. I hope it's helping. I hope this information is helping. So have a good one too, Mount Doji. All right. Well, enjoy the rest of your day, and hope you guys can tune in tomorrow. So on the way out, I got to play the legal disclaimer again. So take care, everybody, and thanks a lot. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.